Hello everyone and welcome to my channel. So guys, I want to show you another example of a QM cell setup. Remember, if you've watched my previous video, I was trying to explain to you guys how to be able, to get what? To get a QM cell pattern, and basically we said this is how a QM cell pattern looks. So guys, remember to show some love by liking, subscribing, turning on the notification bell, and also commenting, leaving us a comment on the comment section below, and also you can share this with your friends and family. So let's get on with the lesson. So the first thing we want to do is we want to use the higher time frame. In this case, we're going to use the daily time frame to do what? To identify the direction of the market. And you can see here that this is the market is on a what? The market is on a downtrend, and the reason for that is because you can see that the market is giving us what? Lower lows and lower highs, lower lows and lower highs. So definitely in that case, in that scenario, or in this case, we are looking for what? We are looking for sell setups, and I believe this could trickle all the way to the downside. So once we have our what? Let's put this here. Once we get the direction from the higher time frame, then we go on to the lower time frame. So now from the 1 hour time frame, from the daily time frame, sorry, let's go to the 4 hour time frame. You can decide to start to go straight from the daily time frame into the 4 hour time frame. It really doesn't matter like that, but the point is that you have to use the higher time frame bias. You have to use the higher time frame to get the direction of the market. That is the trend. We need to be able to know that, is this a market? Is it an uptrend? Remember, we have 3 types of market. So it's either the market is on an uptrend, or it's either is doing what? Is moving on the sideways or consolidating, or is doing what? Is going to the downside. So these are the 3 types. So when the market is on an uptrend, using the higher time frame, we want to look for buying opportunities. When the market is on a downtrend, we want to look for selling opportunity. When the market is consolidating, you can be looking for short-term sells and buys and sells, something like that. But you have to be conscious so that the market doesn't either spike out. If you enter sell here, you have to be careful, so that you have to also look at the higher time. You have to be careful that it doesn't take you out. So when you're trading this short term, you have to really manage your risk well, and you also have to be trailing your stop loss, so that you don't find yourself in profit, and then before you realize, you're finding yourself in what? Maybe either you've blown your account, or you find yourself in deep loss. Right? So that is very, very, very important. So now on the 4 hour time frame, now we can come here and see clearly that this market is what? It's on a downtrend. You can see that, and like I explained also in the video yesterday, you can see that we are getting reactions every time the market was getting to this level. We get a reaction every time the market comes here. We get a reaction every time the market taps this level. We get a reaction. And what is a reaction? We see that every time the market taps there, it moves to the downside, it moves to the downside, and it moves to the downside. So the question is to ask ourselves, how could we have been able to actually capture this move? Or every time the market comes to those levels that are our levels of interest, how will we have been able to get this move? So from there, let's move to the 1 hour time frame. Then that is where we are going to find our entry. So of course, you can use the 1 hour time frame, or you can use either the 1 hour time frame, or you can use the 2 hour time frame. It really doesn't matter. Or let's look at the 2 hour time frame and see what the 2 hour time frame was giving to us before we go down on the 1 hour time frame. And you can see here very clearly here, we can see our QM setup over here. So we say the first thing we want to do is that we want to change this into a line chart, so that we might be able to identify it well. So let's change this into a line chart. So once we have changed into the line chart, now you can see here that the market did what? The market gave us what? It gave us higher highs. And what did we have here? We had lower lows. So we had our higher high and our lower low, and definitely now we'll be looking to enter when the market comes to tap that level over there. And let's look at the 1 hour time frame. I think on the 1 hour time frame, it also gave us the same thing. Yes, you can see, look at that, very clear. We had our higher highs. Let's use this so I can be able to see the difference. So we have our higher high over there, right? So we had the market broke this level, and then what do we have? We have our lower low, like that. So what will we be doing? We'll be waiting for the market to come to this zone over here. Then that is when we are going to do what? We are going to look for our entry. So let's take this back again into candles. So now you can see clearly here that we have our higher high over there. All right, and then what do we have? We have our lower low, like that. All right, then what do? We're going to mark this high over here, that high over there. That is where we are going to do what? We are going to mark. Right, once we mark that, our work now is to wait. You can see this, it took a long time. These are all 1 hour candlestick, but our work now is to be what? Is to be patient, to wait for this market to come and tap this level. And you can see, look at this, it came and tapped this level, aligned to our QM pattern, and also aligned to our what? To our 4 hour time frame trend line. That is a resistance trend line, right? So you can see there already we have this confluence and we have a pattern. Now the next thing we want to do is we want to look for divergence. Either we want to look for either a regular divergence or a hidden divergence to give us more confirmation. Remember, we want to add more confluence, and that's where we do what? That is when now we bring our awesome oscillator. That's why we bring our awesome oscillator. So what do you notice here? You notice here that as the market was giving us lower highs, all right, what was happening to the awesome oscillator? The awesome oscillator was giving us what? Higher highs. So the market gave us lower highs, the awesome oscillator gave us what? Higher highs. What is that? That is a hidden bearish divergence. And a hidden bearish divergence tells us that the market is gonna continue in the current direction. And what is the current direction? Lower low, lower high, lower low, lower high. That means we are continuing in our lower low. So also, guys, we can look also at this level over here. Look at this. While the market was giving us higher high, right? While the market was giving us higher high, we want to see if we had our divergence. So it's not clear on the 1 hour time frame. Let's go to the 30 minutes time frame and see, and look at that beautiful divergence. What's happening here? The market is the awesome oscillator is giving us what? Lower high. So as the market was giving us higher highs, the awesome oscillator gave us what? Lower highs. And what is that? That is an indication of a what? Of a reversal. So this is a regular bearish divergence telling us the market is about to what? It's about to reverse. So you can see that in as much as we have this, hidden divergence to tell us that the market is going to continue on a downtrend, also when the market was approaching this level, also it still gave us another divergence, which is a regular bearish divergence to tell us that this market is going to do what? Is going to reverse. So what do? When the market comes to this level, you find your entries. You can either set your limits over there or get your entries, whatever it is. Then you enter there the market. Then you do what? You target this level over here. That is where you'll have your first take profit. And look at this, 0 drawdown. And you can see this one actually has played out almost 11.5%. So it's as simple as that. Higher time frame, find your trend and your direction. Come to lower time frame, find your QM pattern. After you've gotten your QM pattern, look for divergence, of which here we had a hidden bearish divergence. After that, wait for the market to come to the zone. Once the market comes to the zone, get your entries. I have other perfect entry that I normally use, and that one I say, like I said, I normally teach it on my student community, and I also have a course that I normally go in depth into this. You can reach me out on Telegram, then I can be able to guide you on how you can be able to get that. So you get your confirmation, you enter, you place your stop loss, and then you just wait for the trade to play out. Of course, once you move into profit, what do? You keep doing what? You keep trailing your stop loss. So guys, this thing is as simple as that. No complication. Don't complicate it. It's as simple as that. So thank you so much, guys, for watching. If you have learned something, you found value on this lesson, remember to like, to subscribe, to turn on the notification bell. Remember to share with your friends and your families, and also remember to leave a comment on the comment section below. If you want to join my free Telegram channel, the link is on the description below. If you want to join my student community, whereby you get access to my course, and also you get access to my trading ideas and what I'm trading, the link also is on the description below. You can reach me out on that. So thank you so much, guys, for watching. This is EagleEyeFX signing out.